Hi, it is Monday morning, 16th of September. This channel is Drips Media, and I will be covering financial news from New York stock exchanges before markets open. The regular trading for the U.S. stock market opens at 9:30 a.m. My name is Daniela Drips. I will be quickly covering last week closing data, main indexes, and the key companies. Please follow us online.
Good morning. This is Drips Media, lid from New York. Drips Media, the revolutionary digital service that transforms the way you stay informed. With Drips Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, Drips News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with Drips News.
All three major indices closed higher yesterday, extending their recent rally. The Dow Jones Industrial Average gained 299.22 points, closing at 41,393.8, marking its third straight day of gains. The S&P 500 climbed 30.7 points to finish at 5,626, securing its fifth consecutive gain. The tech-heavy NASDAQ composite also continued its upward trajectory, adding 114.5 points to close at 17,684, also marking its fifth consecutive day in the green. Investors seem to be shaking off recent concerns about interest rates and inflation, at least for now. The positive momentum in the markets suggests a renewed sense of optimism, possibly fueled by hopes of a soft landing for the economy. However, it's worth noting that trading volumes have been relatively light in recent sessions, which could mean that these gains are not built on the most robust foundation. We'll be keeping a close eye on market movements and economic indicators in the coming days to see if this bullish sentiment can be sustained. Turning our attention to the tech sector, Apple's stock saw a slight dip yesterday, closing at $222.50. This ends the tech giant's two-day winning streak. Meanwhile, Google continues its upward climb, closing at $157.50. This marks three consecutive days of gains for the search engine giant, signaling strong investor confidence. Microsoft also extended its winning streak, closing at $430.60. This marks five consecutive days of gains for the software titan, suggesting continued bullish sentiment around the company's future prospects. These mixed results within the tech sector highlight the ongoing uncertainty in the market. While some tech giants are enjoying sustained growth, others are experiencing pullbacks. Investors are likely weighing a variety of factors, including interest rate expectations, inflation concerns, and the overall health of the economy. It remains to be seen whether these tech giants can maintain their upward momentum in the coming days and weeks. Now let's delve a bit deeper into Microsoft's performance. The software giant closed at $430.60 yesterday, adding to its winning streak with a fifth consecutive day of gains. This impressive run has propelled Microsoft's stock price up by 7.2% over the past 5 days alone. Zooming out a bit, we see that Microsoft has also enjoyed solid gains over longer timeframes. The stock is up 3.2% month to date and a remarkable 15% since the beginning of the year. year. This sustained upward trajectory underscores the market's confidence in Microsoft's ability to navigate the current economic landscape and deliver strong results. Looking at the recent trading history, Microsoft's stock has closed higher in 8 out of the last 10 trading sessions. This consistent upward movement suggests that the current rally is supported by genuine buying pressure, indicating a positive outlook for the company's future performance. However, not all tech stocks are riding the wave of bullish sentiment. Amazon, Meta, and Nvidia all saw their winning streaks come to an end yesterday. Amazon stock closed at $186.49, a slight dip of 0.3%, reversing its 4-day upward trend. Similarly, Meta experienced a minor setback, with its stock price closing at $524.62, down 0.2%, ending its 2-day streak of gains. Nvidia's stock also closed slightly lower at $119.10, a marginal decrease of 0.03%, snapping its 4-day winning streak. These pullbacks, though small, suggest that some investors might be taking profits after the recent tech rally or perhaps expressing caution amidst the broader market uncertainty. Nvidia, on the other hand, saw its 4-day winning streak come to an end, closing at $119.10, a marginal decrease of 0.03%. Despite this minor setback, the chipmaker has been a stellar performer this year, boasting a year-to-date gain of 141%. Even with the recent dip, Nvidia's stock has still climbed an impressive 15.8% over the past 5 days and has closed higher in 5 out of the last 10 trading sessions. However, the recent pullback might signal some investor caution, potentially driven by profit-taking or concerns about the broader market outlook. Shifting our focus to the financial sector, we saw a mixed bag of results yesterday. Bank of America continued its downward trend, closing at $38.70, marking 4 consecutive days of losses. JP Morgan also struggled, closing at $204.30, extending its losing streak to 2 days. However, it wasn't all doom and gloom in the financial sector. American Express shone brightly, closing at $259, a gain of 1.5%. This marks 3 consecutive days of gains for the credit card giant. Similarly, Visa ended the day at $287.40, up 0.7%, securing its 2nd straight day of gains. MasterCard also joined the ranks of gainers, closing at $493.40, a modest increase of 0.3%. This marks an impressive 5 consecutive days of gains for MasterCard. Morgan Stanley rounded out the positive performers, reversing its previous day's losses to close at $98.30, a gain of 1.7%. These recent losses have put a dent in Bank of America's performance for the month, with the stock down 4.5% month to date. However, despite this recent dip, the banking giant is still holding on to a 17% gain since the start of the year. Looking at the recent trading history, Bank of America's stock has closed higher in only 1 out of the last 10 trading sessions. This suggests that the current downward trend might be a cause for concern for some investors, potentially reflecting broader anxieties about the health of the financial sector. JP Morgan also experienced difficulties, closing at $204.30, extending its losing streak to 2 days. These recent losses have weighed on JP Morgan's performance, with the stock down 4.1% month to date. However, despite this recent dip, the banking giant is still clinging to a 9.8% gain since the start of the year. Looking at the recent trading history, JP Morgan's stock has closed higher in only 2 out of the last 10 trading sessions. Turning our attention to the cryptocurrency market, we saw a sea of red yesterday. Bitcoin, the world's largest cryptocurrency, tumbled 2.6% to close at $58,433.98. This marks 2 consecutive days of losses for Bitcoin. Ethereum, the second largest cryptocurrency, suffered even steeper losses, plummeting 5.8% to close at $2,278.61. This also marks 2 consecutive days of losses for Ethereum. Dogecoin, often considered the meme coin, wasn't spared from the sell-off either. It plunged 3.9% to close at 10 cents, marking 2 consecutive days of losses. The slump in the cryptocurrency market could be attributed to a variety of factors, including profit-taking after recent gains, concerns about regulatory crackdowns, and a general risk-off sentiment in the broader financial markets. The recent losses have put a dent in Bitcoin's performance, with the cryptocurrency down 0.9% month to date. However, despite this recent dip, Bitcoin is still holding onto a significant 38% gain since the start of the year. Looking at the recent trading history, Bitcoin has closed higher in 6 out of the last 10 trading sessions. This suggests that while the current downward trend might be a cause for concern for some investors, the overall sentiment towards Bitcoin remains cautiously optimistic. The volatility in the cryptocurrency market underscores the inherent risks associated with these digital assets. Investors should exercise caution and be prepared for significant price swings, especially in light of the current market uncertainty and regulatory scrutiny.